How much stock do I have in my portfolio and how much am I planning to buy right now? And how much should you be considering? I'm going to answer that question right now. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you. You've been working so hard for that money, and you're now ready for that money to start working harder for you today. Why? Because you're sick and tired of slaving away for that money. You're sick and tired of slaving and saving for 30 or 40 years, only to find out it's not enough. But instead, you want to become work optional, where you work because you want to, not because you have to, because you have enough passive income to cover all of your family's needs and then some. And it's not just for you to be comfortable and just to do whatever you want with whenever you want with whomever you want. Although that's awesome too. But it's actually for you to live a blessed and rich life, because as you are blessed financially, you have a greater capacity to bless the lives of those around you. And that is the ripple effect we talk about on this show today. Thank you for tuning in. Thank you for sharing. And thank you, of course, for you guys been binging on these episodes for so many years. I know many of you guys are going back through. We start to see some of these episodes pop up again because you guys are going through them. And again, if there's anything we can do to help answer questions for you, if you have a question, you say, Chris, you need to address this on your podcast, email me. Just email info@moneyripples.com and say, Chris, this is a question I would love to have answered. Please reach out to me with those questions. But if it's a question that's more personal to you, feel free to reach out to us on our website at moneyripples.com. All right, so let's talk about the stock market, right? How much am I buying in stocks? What am I going to be doing? What do I see as the future of the stock market right now? And the answer is, I'm not buying it. Okay. I'm not buying it. One, how much do I have in stocks right now? I have zero in stocks. This is from a guy that used to be a very big, I shouldn't say very big, somebody who is actively trading in the stock market. This is somebody who actually taught other people how to actively trade in the stock market. But then, of course, as I started to see some patterns emerge, and also when I look for this, the evidence of people's lives that do the stock trading and even options trading and things like that, I found out that they really weren't financially free. Because understand this, is that we get people reaching out to us that are stock and options traders saying, I need passive income. I'm not getting it from the stock market. We also get a lot more people reaching out that say, I've got money, I had it in the stock market. I've watched it dip a little bit lately. I'm concerned. I'm worried. Is there something better that I could be doing with my money? Is there a way maybe I can lock in these gains? Because really right now the market's already dropped to where it was back in 2024. Maybe I should lock in my gains now that I've made for the last really 16 plus years as the market's been recovering, since the previous recession. Maybe it's time to get out now. And this is exactly why I'm already out. I already saw this coming up a long time ago. Now, somebody might say, well, there's opportunity cost there, Chris. You didn't get all the stock market gains. And you're right, I didn't. But I got a lot better gains than that. Now, here's the thing is I was debating about, I'm not saying this will be the title of the episode, but I was almost debating this episode calling it Screw Your Friends. And I don't mean screw them over. I mean, forget about it. Because I was actually sitting in a lending, actually central lending that we advertise on the show. I was sitting in their annual event that they were putting on at their home office in Lakeland, Florida. And I was sitting there. It was so funny because I had just got done teaching about passive income and about all the money myths and the lies. Like some of them, if you guys watch my master classes, that's also on the YouTube channel under the live section. I've talked about some of these lies and myths. And I just got done talking about all these lies and myths. And who comes up after me? Now, the guy wasn't there except for the very tail end of my presentation, my stage presentation. But then he gets up, and what does he do? This financial advisor starts teaching the exact same things I taught were myths and lies. And of course, what quote does he pull up? He pulls up this one. If you've been around long enough, you've probably heard somebody quote Einstein one way or the other like this, saying, Albert Einstein said that compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Here's a problem, guys. Simple research on this quote. Albert Einstein never said it. There is zero proof he said it. Yet, every financial advisor, including myself back in the day when I was a financial advisor, every financial advisor teaches this like it's gospel, like the most brilliant man in the world would do it. And in fact, the funny thing is when financial advisors do say, well, there's no proof he said it, but he's a brilliant guy, he probably did. No, guys, that is not the point here. So when they keep telling you this kind of stuff, this is what I mean by screw your friends, because this guy getting up as a financial advisor, everything he was teaching was by the book. Now, there were some things he was teaching that you could tell he has a breadth of experience in. He wasn't the typical financial advisor that I say has, 1 year of training repeated 30 times. This guy, I would say he had 15 years of training repeated at least twice each. So this guy had been been as a financial advisor for about 30, 35 years. And he taught some good things, and he knew some good facts, I thought, even about the markets and what's going on with the economy. But again, he goes right back to the same old thing about set it and forget it, let it compound forever, and here's what it can look like in the future, right? And then you got like other quotes, like Dave Ramsey says, like this one. He's very popular for using this kind of quote here, saying he invests $100 a month from age 20 to 65. He's assuming 12% return. It's $1,176,000. You do not have to retire broke. Now, those of you again who watch some of my stuff that like my master classes already know he did the math wrong. $100 a month, if you put in the calculator at 12%, is not $1,176,000. No, it is not. You will see here, if you see on my screen, $979,000. So he's off by $200,000. Doesn't even get it right with 12%. Now you'd think everybody would be raking in the dough. I mean, come on. If you just save $100 a month for the next 40 years, all retirees should be retiring millionaire, right? At least the ones that have been saving. And just so you know, savers are pretty common, right? I would say it's split about 50-50 from what I've seen. And I'm basing this on some evidence, right? But everybody says that spenders are ruling the world and that there's hardly any savers out there. And you're like the few, the proud, and they make you feel so proud for being that saver. The truth is I think there's much fewer spenders than people realize. One, I think there's survivors. It might be spenders, survivors, and savers, right? Spenders are ones that do blow money. No doubt there are spenders out there. Survivors are those that are spending all their money, but not because they want to, but because they're literally paycheck to paycheck. I think a lot of these survivors would actually be savers. Some of them would be spenders too. I think a lot of these would be savers had they been given extra money, or making more money than they are. And then there's savers, of course, those that do it. Now, of those that have 401k eligibility, 52% of people actually have money in their 401ks. This includes people like me who could set up a 401k eligible for it, but won't do it, right? So I believe that those people that do work jobs where they do have company benefits, not just service type jobs where maybe you're working as a server or something like that, or you're working in, like in some of the retail industry where you may or may not be offered this. A lot of retail industry does do that. Still, more than half of people still select to save, even for retirement, beyond just saving in their own savings accounts. So therefore, I think there's a lot more savers people realize. So shouldn't there be this literally millions upon millions upon millions of people saying, I'm a millionaire, especially in retirement? Nope. Here's the statistics, right? Now, this article, although it was written in 2025, a lot of the stuff it looks at is actually looking at less. It does say the majority of people, there's only about 4.7% of Americans that have at least $1 million in their accounts. Of course, it drops to 1.8% when you're at 2 million and 0.8% for 3 million, right? So less than 1% of people have over $3 million. Now, you might think that's a good, significant amount of money, and it is. Here's the scary part. The average retiree between 65 and 74, the average was $609,000. But here's what's most important. Although it's $600,000, this is 2022 survey, $600,000, guess what? That's the average. What's the median? The median is much scary. The median retirement savings, $200,000. So what does this mean? That means there are some people that had millions upon millions, maybe tens of millions of dollars in retirement accounts, right? Probably have family offices managing them and things like that. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. That skews the average way over because the average retirement account is not going to go below zero. So there's a zero as a stop, and then you have all these extremes all the way out here, right? But so the average is just over 600,000 because, of course, you got these tens of millions of dollars of accounts over here. But the median, the person that's right in the middle, if you have, say, 2 million people, right, or 2 million and one, and the number 1 million and one person in the middle is there, they would have $200,000. That means there's way more people on the lower end than the higher end. The higher end is skewed. This means that most people have less than 200,000. More than half people have less than 200,000 and they're between 65 and 74. Now, is this because they weren't saving? In some cases, yes. But in most cases, no, they were saving, but it just wasn't enough. One is this problem. Their average return was not 12%. It was closer, if you're lucky, 8%. Well, let's just do 8%. What do we get? 324,000. Now it's still over the average, isn't it? But a lot of people, because of the kind of things that they do, 401ks and whatnot, 401ks have worse performance. You might see even like 7%. Watch 1% drop. 1% takes you from over 300,000 to now 248,000. Notice the difference. Just 1% can make a massive difference, even after, especially after 40 years. So this is what's happening. Now, people, of course, are accessing their accounts. They might have to do it for different reasons, right? There's always different stuff. But the problem is that I know that even among our own clients, but maybe among you, you're probably worried, yeah, but everybody talks about this, Chris. Everybody says we should be doing this. Yeah, but even if every person says to go, jump off a bridge, should we do it? Right? Now, these are usually, if you were to put this in the same kind of context, I know I'm using a dumb example, jump off a bridge. It sounds like my parents, right? Go, if everybody jumped off a cliff, would you follow? Right? That's what it sounds like. Well, let's just use the jumping off the bridge example. Say it's like, hey, it's a lot of fun. But then everybody you're asking that says jump off a bridge hasn't done it themselves. They said, well, I've heard from this expert that jump off the bridge is really fun, so we should do it. Okay, cool. Did you do it? No, I haven't done it yet. No. But what do we do? Because everybody says, oh yeah, I even heard on the news. The news said jump off the bridge is the best thing ever. It's like the new Tide Pod challenge. You should do it, right? That's what they're doing. Like they're constantly just pitching at you all the time, selling you this thing. Jump off the bridge is the best thing ever. Jump off the bridge, best thing ever. You're like, yeah, but how many people survive? Oh, it's okay because, really about a couple percent survive. The rest of them die on the water, but a couple percent survive. Would you jump off that bridge? But how many times do we have people saying, you just got to keep putting money away? And, I'm starting to do things in real estate investing. Yeah, granted, there's tens of millions of people that are legitimately financially free because of real estate. Many people became multimillionaires mainly because of the real estate, not because of their stock values, but because of real estate values that pushed them into the millionaire status. Funny enough, so many of us be like, oh, I don't want to talk to my friends about that. No, I don't want to sound like a crazy person. Yes, there's tens of millions of us that do it, but I don't want to sound like a crazy person because there's hundreds of millions of people that believe jumping off the bridge is the best thing, even though stats say good luck. Just so you know, even that $1 million, remember it's like 4.7% have over $1 million in their retirement accounts. Remember this, is that 4.7%, $1 million living on 3% a year, which is all you're supposed to be pulling out of mutual funds of your retirement accounts, is $30,000 a year. That's below poverty. That $2 million, remember the $2 million point? What was that? Again, that was, yes, those that have $2 million or more, 1.8%. So less than 2% have $2 million, meaning they can pull off $60,000 a year. Many of you come up talking to us saying, I want at least $100,000 a year. Well, you need to have 3.33 million in the market. How many people have over $3 million in their retirement accounts? 0.8%. I bet you that number goes down even more if we go to 3.33 million to get you that 100,000, and that's before you pay taxes, right? See the problem. See the issue here. This is what I'm talking about. Why are we worried about what other people think that, one, haven't done it themselves, and then two, it doesn't work anyways? It's been proven not to work, yet we believe it will. This is my issue. This is my big, big problem with this. This is just like people misquoting Albert Einstein, again, to fulfill really the mission of those financial companies. Those financial service companies want you to put money with them. They want you to lock it away. They want you to put it away there forever so they can get paid, charging you fees forever. Financial advisors get paid on those fees forever. Financial advisors do not make money retiring. Financial advisors, if they have a good amount in retirement accounts, it's only because they did a great sales job, not because they were making lots of money investing in their mutual funds that they're telling you to go into. Now, if they have other monies from other places, cool. But I'll tell you, I've ran into a financial advisor that some of my neighbors are like, oh, this is good. Now, he's a former financial advisor, now retiree in his 70s. They're like, oh, this is great. How'd you retire? Now, they heard and knew that I retired, but they asked the old guy, well, what'd you do? And then, of course, when 2020 hit and the market started tanking, they're like, oh, well, how are you doing? He's like, oh, well, not great. My account got hit hard, in March 2020, but it's fine because I have a pension that's coming in from one of the companies I worked for. I also have Social Security. Oh, and I have a little bit of military pension coming in too. He's like, honestly, I don't even need the retirement accounts. And you can see all the faces of these people that were roughly 50 years old or younger, all their faces fell. Wait, so you don't even have enough to retire. Literally, he didn't even care about that. The stocks didn't even matter because he had all these pensions. That's why I try to tell people, like, if you strip away Social Security, you strip away any kind of pensions that people might be getting from government jobs, and you just leave them to their savings like this, which is what most people are literally banking on, and that's their only answer that they have. It's not enough. It's not enough. So guys, screw your friends. Forget about them. Forget about it. Do what works. Listen, I'm not the only one that's living proof. We've had lots of people on the show that's living proof. We've had some of our own clients living proof. And even the ones that are not there yet, quote unquote, there yet, they're still better off with their passive income than most of anybody else listening to this show right now that only has retirement accounts hoping to retire on mutual funds. That's the difference. There are people literally with less money making more income than anybody else that's trying to retire with their mutual funds. And many people trying to retire their mutual funds still come to us and say, let's do it differently. Just like I mentioned with Dan Markert, when he came to us with his $1 million retirement account, he's like, I can't live on 30,000 a year. I need more. And so we got him in diversified in different places. And now he's making over 100. Well, he was until he passed away recently, making over 100 grand a year, right? There's so many people that are doing this right now. This actually works. Why do we care about what doesn't work? Why do we keep buying into that stuff just because it's taught all the time? Just because a lot of people said, hey, you know what? You need to eat lots of carbs, and that means you should be eating tons of bread. That's going to be good for you when you play sports. Like I was told growing up, came out to find out that's bull crap. It's not the case. People are like, carb load. No, that's dumb. Not those kind of carbs, not simple carbs. Complex carbs, maybe, yes. Simple carbs, no. That doesn't mean you load up on cereal. It doesn't mean you load up on donuts. That's the problem. Everybody's kind of doing this stuff. So anyways, I don't want to beat a dead horse because I do that on the show all the time. I just want you to walk away knowing that there is a better answer. There is a better way. And it's not what your financial advisors teach you. It's not what you're going to learn on CNBC. It's not what you're going to learn on any money show, Jim Cramer, Susie Orman, Dave Ramsey. They just don't get it. They're teaching the same thing, the same old freaking dogma that hasn't worked for so many years, but they make great money when you believe it. Get away from it. Break free of that. Just walk away from that. There are better ways. So if this is your very first time on this channel, keep watching, keep learning, keep understanding that. If you're like, no, I need to make a change in my life right now. I don't know what the market's going to do, especially now that Feds and Trump is starting to fight. Who knows about tariffs? Who knows about taxes, Social Security, all this other stuff that's coming to a head right now, propelling us into a recession. Now that even most people are saying recession is almost imminent this year, this might be the perfect time right now to make a change. But you got to start preparing now. You got to start learning now what's even possible. If you have questions on that, and if you want to try us out, reach out to us at moneyripples.com. But in the meantime, break free of the mundane, break free of the mainstream media crap that you're always taught and do something else. Go and make it a wonderful and prosperous week. We'll see you later.